Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Friday the 5th of July 2013. Well, it was about the ECB and the Bank of England yesterday. They did their fair share of causing volatility in the markets. But today it's all about the NFP to rustle some market feathers. We do have that NFP number coming up later today. The market expectation is for 165,000 payrolls. Us here at Forex.com, we think it will be 195, so we're a little bit higher than expectations. Now, the market also thinks that unemployment will fall to 7.5%. Now, this labour market report is absolutely critical. Fed meeting when Bernanke really touted the possibility of near-term Fed tapering of its QE3 programme, potentially as soon as September. So everyone is going to be watching this. A strong payrolls number equals more tapering. That could have a bit of a negative risk-off effect on the stock markets. Remember, however, it will be a real test of what the ECB and the Bank of England are doing. Is their forward guidance, their remaining on hold for the long term, is that enough to pick up some of the slack from the Fed? The other thing, of course, is that, obviously if we get a weaker number than expected, then, all bets are off. The Fed aren't going to be tapering assets if the economy doesn't perform. So you've got to watch out for that. Now, dollar yen is whenever you think of payrolls, always think of dollar yen. Let's take a look at that. As you can see, dollar yen in the lead up to payrolls has actually been quite weak. It's just testing that 100 handle. It's fallen back today, but it's clinging onto that 100 level as we speak. But whether or not, but its future direction is very much going to be directed by this payrolls report. Now, we saw some selling interest the last couple of days at 180. That is below a really key level. This is the daily Ichimoku cloud, as you can see, and the top of that cloud comes in at 101.20. So there is selling interest above there. So if we get a stronger payrolls number, that could be enough that really pushes us higher. And by stronger, I mean somewhere in the line of 160 to 200. Now, the other thing that we would say as well, though, if we do get a weaker number or a number around about consensus that causes just a little bit of dollar sentiment to decrease even further, then there is good support in 99.20. Usually, as you can see, it's a bit of a binary. With payrolls, it's a bit of a stab in the dark. The markets will go one way or the other. So just make sure you know your levels as you lead up to it, because make sure you know your resistance and you know your support. It's not a great option always to try and guess what the payrolls are going to be in advance. Now, also what's in focus is the pound. Carney and Mark Carney at the Bank of England, Mario Draghi at the ECB, their sentiments yesterday have really weighed on their currency. So euro dollar below 130, and look at the pound. It has slipped well below 150. So some of the lowest levels for a couple of months there in the pound. This is the cable rate. As you can see, it's broken below some trend line support. Right at the time of writing, we were trading at 149.70. Again, its near-term outlook is going to be very much dependent on what's going on with payrolls, stronger payrolls number, and we could get even lower. But this break below 150 is really significant. If we don't climb, if we get a weekly close below 150, then it really opens the way to those 149 and 148.70 lows from May. But overall, good luck trading the payrolls figure later on today. And please do join us next time for more. Thank you.